While public attention remains on consumer-facing crypto apps, global financial institutions are rebuilding the systems that move capital between banks. Ripple's technology is being integrated into these underlying layers. This data visualization highlights Citibank's projection for the tokenized securities market. It tracks an anticipated expansion from $17 billion today to $5.5 trillion by the year 2030. Tokenized securities represent traditional assets, stocks, bonds, real estate, and government treasuries, converted into digital tokens on a blockchain, making them programmable and faster to settle. Moving $5.5 trillion of these assets requires immense physical capacity. A market of this size creates an immediate operational vacuum. It demands a secure clearing and settlement backbone capable of handling high-frequency, massive-scale transfers. The financial institutions preparing for this migration are making calculated decisions about which entities can actually construct the heavy-duty plumbing required to process this transfer of value. In the United States, that plumbing is the Depository Trust and Clearing Corporation, or DTCC. It acts as the central post-trade backbone that processes the clearing and settlement for nearly all U.S. equity transactions. Ripple recently committed capital to integrate with this environment. In a $1.25 billion acquisition, they purchased the multi-asset prime brokerage Hidden Road, establishing a documented institutional foothold. On this hierarchical map of the DTCC network, alongside legacy participants like JP Morgan and Goldman Sachs, the rebranded Ripple Prime is now documented at entry 9388. This active connection allows Ripple's RLUSD stablecoin to clear and settle traditional securities for institutional clients in production. The integration into U.S. markets is occurring alongside a similar expansion across the Pacific. Securing this access transitions Ripple from an external technology provider to an operational participant within the same clearing environment used by the world's largest investment banks. Global banking entities are aligning their compliance frameworks and product offerings for the moment tokenization becomes the standard for asset management. While Ripple Prime secures a foothold in the United States, a parallel architecture is being constructed simultaneously in the Eastern Hemisphere. In Japan, the ruling Liberal Democratic Party recently submitted a formal proposal to the country's financial minister. This submission calls for a legal framework to govern crypto ETF trading and the promotion of yen-based stablecoins. The legislative proposal in Japan provides the legal certainty required for these systems to scale. Ruling governments deploy these financial frameworks specifically when institutional actors have the operational infrastructure ready to execute. This map illustrates the scale of that readiness in Asia. It tracks the $2.5 trillion in international remittances already processed by SBI Holdings, utilizing Ripple-connected infrastructure to move capital across borders. At the same time, Binance rolled out 9 XRP-focused products, granting its 300 million global customers access to this ecosystem. These developments move the conversation beyond the mechanics of digital tokens and into the logistics of global trade. The combination of SBI's volume and Binance's distribution confirms the system is running at scale. It moves Ripple away from theoretical pilot programs and into an operational reality. There is a disconnect between public perception and market mechanics. While retail markets often focus on social sentiment, institutional giants operate based on documented legal frameworks and operational infrastructure. Legacy banking relies on an inefficient model. Capital moves through multi-day windows, suffering friction and fee extraction at every stop. Blockchain networks address this friction by replacing a relay of messages with instantaneous, mathematically verified settlement. Pillars include US DTCC integration, formal legislative frameworks in Japan, and global access through Binance. These are separate institutions in different jurisdictions, arriving at the same structural conclusion at the same time. The banks and regulators in this story are moving past theoretical projections and into the construction of physical clearing systems. The transition of global capital toward a $5.5 trillion tokenization market is a documented, methodical process occurring in both the Eastern and Western hemispheres. The question is not if blockchain enters finance, but which networks power the future. Ripple may be building that future today. If you found value in this breakdown, like, share, and subscribe for more finance and crypto documentaries.